Hello and welcome to the Security Token Show, everyone. I'm your host, Herwig Konings. Today, I will be solo running it as Kyle is out traveling, but I am excited to get you all the latest news over here in the United States. Last week was Thanksgiving, and that definitely did not create a break in the news. We've got an action-packed episode of information for you today. So with that, let's dive right into the Token Debrief. And joining me today, we have Jason Baraza, our very own COO at Security Token Market. How are you, Jason?
Doing great. Excited to cover the news once again. Let's jump right in, Herwig. What do you have going?
Let's do it. We're going to head on over to Japan, where we got big news. Specifically, the Osaka Digital Exchange will begin trading security tokens, specifically ones issued by real estate firm Ichigo and Kenedix, starting on December 25th. So nice little Christmas bonus here, where we get another firm, and I believe this is one of the first, if not the first, to begin trading. So, we've seen a lot of action going on in Japan. This is the first time that I think we see news where we're actually going to be able to start seeing some of these securities go from their primary offerings to their secondary market listings, this time with Osaka Digital Exchange. Very cool stuff. But we also saw Japan's Okasan Securities say that they plan to issue about a $13 million bond later in December as well. So this will be a digital bond on Progmat, which Progmat is a tokenization platform by MUFG. That's the fifth largest bank in the world, folks. Progmat has been getting very busy, and looks like this will be yet another bond issued by Progmat, also underwritten by Mizuho Securities. So all very legitimate transactions. It looks like the markets are kicking up over in Japan. What do you think, Jason?
Love it, love it. Great to see always the secondary markets getting activated worldwide. Great news for Japan. Kinetics really stands out to me personally just because we covered them on the What's Open newsletter back in May. And back then, they were not offering their first or second or even third, but their fifth security token offering with the goal to get up to 10 by end of year. We'll see if they hit that goal. But to enable the secondary markets for them now on Osaka Digital Exchange is really exciting for all of these offerings. So really good stuff for them. Same with Ichigo and their $20 million offering here that they have going on. And for Okasan Securities, really, really great to see a one-year bond, 1 million yen, it's about 6,700 here in USD. So, this is exciting, man.
Yeah, maybe we'll get an update on that later in December.
Yeah, but shifting gears just a few feet over, in China, we have China AMC from Hong Kong has signed a memorandum of understanding, or an MOU, with Hash Blockchain Limited, or Hashkey as known over there, and Hamsa Tech in Hong Kong, to basically develop and promote Web3 in the asset management industry for that region. So, they all play a different part and role in this partnership, if you will. China AMC is an asset manager. They're really trying to, combine virtual assets, as they call them, with TradFi. Hashkey is more of a licensed virtual assets exchange, right? So they're providing that secondary market piece to the puzzle here, and they're able to provide omnibus trading services, tokenization services, OTC bulk trading, etc. And then Hamsa, which has some experience in virtual asset space, as noted in the State of Security Tokens Q1 report that Peter Gaffney put out, a few quarters back. They had already tokenized $3 billion of private credit and receivables. So, no small feat there with Hamsa and the rest of the gang here. Any thoughts here, Herwig?
This is a great partnership across the board. You got all the elements coming together, and China AMC, they are a $250 billion asset manager. So they're no small shop either, picking some great partners to bring together the Hong Kong tokenization ecosystem. So I absolutely love to see that. All of the world's biggest asset managers are getting behind tokenization. We're going to talk even more about that later. And we also saw, Jason, that Victory Securities, which is yet another firm in Hong Kong, they receive their digital asset service provider licenses for virtual assets, as you said that they call it over there. So again, we're seeing some ecosystem activity happening in Hong Kong. All signs point to an exciting 2024 for both Japan and Hong Kong, it looks like. And moving on over to the United States, we have some big news, specifically from Figure, which is one of the leading platforms in the space. They're actually more well known for being a HELOC lender. That's home equity line of credit. They are the largest non-bank HELOC lender in the United States, in the world, probably. That's a big deal, folks, because traditionally this is all done mostly by banks, and they're using their own technology, the Provenance blockchain, to power those loans. So they take advantage of these efficiencies, transparency, and many other benefits that the Figure team loves to highlight. But what this is all about is the fact that Figure is actually going to take their lending business, their HELOC business, if you will, and I'm sure they're expanding into other types, and they're planning to IPO that, which I think is a pretty big deal. We don't see a lot of companies, specifically in the tokenization space, obviously be public. Very difficult to kind of get exposure to something like that. And now you're going to get exposure to a state-of-the-art lending business, publicly trading using blockchain. I think that's a big move for the industry. And they're working with their old friends, Goldman, JP Morgan, Jefferies, who helped underwrite their loan for actually delivering the HELOCs to people. So they're clearly buying into the vision of what Figure is doing, and we'll see how successful that IPO is. I believe they're targeting Q1 or so. So I think that's amazing news. Any thoughts on this, Jason?
Yeah, great to see it. Seeping into the public markets. Tokenization of public markets here. This is just Figure lending, right? It's not all of Figure. So it's important to note that they're separately also looking to raise $50 million for the digital assets arm. As part of Figure. But, keeping on with Figure lending, I mean, they just released their essentially infrastructure play, right? They're doing lending as a service. The idea is that they're not necessarily trying to be the marketplace, but they are trying to show those cost savings and whatnot through their own issuances. So great to see lending as a service that just launched about a month back, maybe a little less. And now this exciting news with the IPO. I think they're looking for $2-3 billion valuation. So hefty number. But moving on also to Euroclear and Capgemini. They're collaborating to successfully launch a digital financial market infrastructure, or they're coining it DFMI, right? And the idea is to enable issuance, distribution, settlement for securities, all on distributed ledger technology. The chief digital officer at Euroclear specifically said, our DFMI strategy stands as one of the key pillars of our group strategy, which starts from purpose to bring safety, efficiency, and connections to the financial markets and sustainable growth. So great to see this. Capgemini obviously has helped others, try to bring this technology together, and great to see Euroclear diving into this as well.
Euroclear is huge, folks. Also based out of Belgium, where I'm originally from. But Euroclear, just so people don't know, in 2021, they settled about 992 trillion in securities transactions. They're one of Europe's biggest, the world's biggest. The fact that they're moving forward with their DFMI, Capgemini, big win for them as the integrating solution that they're going to use. And they also hinted at the DSI, which will be their secondary market solution. So they have a full vision here that the Euroclear sees for the life cycle of tokenization that they're implementing. And of course, that starts with the primary issuances. So it's great to see DFMI come to market. And we also have a big announcement from First Avenue. So First Avenue is specifically making a strategic investment in frictionless markets. That's the UK into Luxembourg. That's where frictionless markets is based, and First Avenue in London. And this is a natural, beautiful bridge, another classic partnership. First Avenue has raised over $30 billion as a placement agent into what I think is mostly private markets, but it could be public markets as well. I might be wrong on that. Mostly acting as a placement agent for institutions. So the big takeaway here is that First Avenue is really partnering up with frictionless markets by putting their money where their mouth is. and investing in them in order to eventually also presumably help their clients take advantage of the new digital infrastructure, leveraging what Frictionless Markets has been building a long time here, being licensed out of Luxembourg, MiFID II compliant for fund tokenization. We're about to touch on that. So presumably Frictionless Markets will be a venue that First Avenue helps brings hopefully tokenized asset management products to, or helps, sell to their clients. So very, very interesting news. Did you have anything you want to add here, Jason?
Just great to see more fuel to the fire on the distribution side. It's always been a problem, in the tokenization space, as it's still a nascent industry. So great to see someone that has experience on that side of the puzzle to bring it over onto the tokenization rails and partner here with Frictionless Markets. So fantastic news there. Congratulations, Pat Horrigan and team. But moving over to the UK, we also have the Investment Association releasing a blueprint for fund tokenization, right? These are tokenized funds, working with the UK Treasury and the FCA to outline exactly how this can be done in today's world. There's a 3-phase plan. Really, the first one focusing around the infrastructure that's needed, more focus on that front end stuff. Front-end service providers doing the heavier lift there. And then stages 2 and 3 will then focus on a little bit more on the digitization side and a little bit more of back office, so some of those service providing on that end. So great to see that over there. Any thoughts there on Herwig on the UK?
And this is the biggest news of the week. This investment association is essentially the trade group in the UK with $11 trillion in assets under management represented between the different firms. So this is obviously major news. They essentially have been working with the FCA, with the UK Treasury, with everybody that matters in order to essentially greenlight, as they're saying, fund tokenization. So, with phase 1, they've clearly outlined that it's even possible today. And naturally, they want to take advantage of the full benefits with phases 2 and beyond. Calastone has been a major part in making this happen. I like the way that they kind of, clarify it. And this is the same trend and news that we talked about just last week with Apollo and JP Morgan, right? They say it as that their ultimate aim is to have 3 registers for investment funds. They have the client register. So naturally, this is, who owns the product. They have the unit register and they have the asset register. And they want all of this to be accessible on chain to be able to take advantage of all of the different features, from rebalancing to automation and governance and everything they outline in the paper that I haven't even had a chance to fully work through. So highly recommend everybody to go check out that Investment Association paper that they distributed to really dive in again to the benefits of tokenization. The reality is most every major asset manager, Jason, is now basically all saying the same thing, all in the span of like the last 60 days, which is this is absolutely the future. It's what we've been saying for 4+ years now, which is, the fact that you can put everything on chain makes it easier to manage. Data is easier to represent. It's easier to access new investments. It's easier to manage those portfolios or rebalance them. So you don't have to take our word for it anymore. You can take JPM's, you can take this investment association, Calastone's, as well as, even as we saw earlier with China AMC, the world's largest asset managers are all getting behind tokenization. And I think if they're not paying attention, they're probably going to get left behind. What do you think, Jason?
100%. I think there's still some stuff to work out, right? I mean, and this is why this is so important, right? They're outlining a blueprint here, specifically around maybe tackling the issue of using a central securities depository, a CSD, right, to list these funds as ETFs, right? So that's something that will be explored, whether or not you need that CSD or if you can rely solely on blockchain, and that will be explored in the UK's digital security sandbox. So also good to look forward to some of those results as well. But this great step forward.
Yeah, over 19 interested participants in that digital security sandbox, all major players. A lot of good stuff coming out of the UK. Continues to show why they are very forward-thinking, progressive, and really trying to address this. Even the JPM Apollo news, as we know, was done through the MAS over in Singapore, because the likelihood is, especially in the United States, but even acknowledged in the UK and around the world, there still needs to be regulatory updates and changes in order to fully take advantage of the vision that everybody is starting to share when it comes to on-chain asset management. And with that, that is our token debrief. We have another big announcement for our interview coming up. Avalanche has been selected by the Republic Note. We both have representatives from Avalanche and Republic standing by. Let's dive in. Hello and welcome to our favorite security token show segment, now doing interviews. Absolutely honored to have both Jeff Vier, who's the Senior Director of Tokenization at Republic, as well as Morgan Krupetsky, who's the Head of Institutional at Ava Labs. Both here on the show together about a huge announcement we just covered on the show regarding the Republic Note and selecting Avalanche as a blockchain, the underpinning technology to power it. This may be a whole lot of nonsense for anyone who's never heard of the Republic Note. We've obviously been tracking it for a long time, but please, Jeff, maybe just give us, for those of who are new to the scene, give us a take on what the Republic Note is before we dive in.
Yeah, thanks. And thanks for having me, Herwig. Always love joining and being part of the STG family. So a little background on the Republic Note and Republic. So Republic was born out of the Jobs Act in 2016, which was regulated crowdfunding, which is a way for private businesses to sell, stock in their business to accredited and non-accredited investors. The Republic Note is effectively an index of all of the investments that Republic has taken part in over those years, 7 odd years, and as an index of all of the offerings that have been conducted on republic.com and part of those CF offerings or crowdfunding offerings.
How many offerings is that? Do you know? You have a rough number?
Oh man, it's been thousands of offerings and hundreds of tens if not hundreds of investments from Republic in our capital arm, and a little bit more about the Republic Note and how it's constructed. But we look at this asset being digitized or tokenized as integral into its being scalable. So the idea behind the Republic Note is that we wanted an asset that was functional for people to self-custody if they were so willing to. That's a big ethos of ours. Like, can someone actually custody their own digital assets? There's onboarding to crypto, and then there's onboarding to private keys, and we actually wanted to accomplish both. It's a big mission of ours. We also needed an affordable way to deliver dividends to token holders. So all these assets actually will be dividend bearing, and tokenization is really a way for us to do this affordably and in a way that is programmatically restricted, meaning it's programmatically regulated, it's programmatically acting legally in the way that we're distributing dividends. And that's actually something that a lot of people get wrong when they're talking about tokenizing assets and doing things on blockchains. It actually makes it much easier for us to control.
Republic is one of the, if not the biggest crowdfunding platform out there. And you guys have been very, very forward thinking about blockchain for a long time now. And now you're putting your money where your mouth is. And you clearly just described some very strict parameters. You take this very seriously about, picking the right technology to be able to power all of this. So, let's get into Morgan a little bit. Let's talk about Avalanche real quick. I'm sure it wasn't necessarily a quick and easy decision. Maybe let's turn to Morgan, give us a quick introduction, just in case for anyone who's not familiar with specifically Avalanche's focus on-chain finance.
Sure, I'm happy to go into it. And again, Herwig, thanks so much for having us on, and happy to go into Avalanche and kind of the background and why we think it's it's ideal from a tech perspective for tokenization and on-chain finance, although Jeff does a much better job, and it means so much more coming from a partner in terms of kind of informing what led to that decision. But for those who might not necessarily be familiar, Avalanche is a layer 1 blockchain of blockchains. It is EVM compatible, it's smart contract enabled, and really is powered by the third ever most novel consensus mechanism called Avalanche Consensus. And the so what of that is that it's extremely fast. It enables sub-second transaction finality, which is important, but is particularly important for financial services use cases. And when you're talking about kind of value intensive transactions, it just becomes that much more important. And the second big kind of differentiator of Avalanche is really its customizability across a whole host of different parameters. And really the reason why a lot of our partners, whether they're financial institutions or gaming companies or governments or other types of enterprises, really the reason why a lot of those partners ultimately choose to build on Avalanche. So, you know, happy to have Jeff kind of add in as well. But I think for us, from our perspective, tokenization and on-chain finance is really something that we're focused on kind of driving forward. You know, in terms of really kind of upgrading legacy infrastructure and institutional workflows and ways of working, and really using a combination of blockchain technology, tokenization, and smart contracts to really kind of drive forward the future of finance in those respects. And I think for us, from an Ava Labs standpoint, why we really got excited about kind of partnering with Republic on this initiative in particular is, I think, you know, it was mentioned earlier, Republic was really born out of this idea of, you know, we say it a lot, but really the democratization of finance as enabled by Reg CF. And so a lot of the tokenization initiatives today really focus on, you know, the ability for accredited investors to have access to private market investments. Here, it's kind of even expanding it further beyond there and really using Reg CF to enable an even greater number of investors at much lower investment minimums.
Great interview. We just heard from Avalanche and Republic on their news. Great to hear that, and thanks, Herwig, for leading that great interview. But moving on to our market movement side of the show, we're starting off in the Philippines, where they just sold $270 million in their first ever tokenized bonds. Really exciting to see this because it was oversubscribed more than 3 times. So there's really talks to the confidence that people have in the Philippine peso and the Philippine you know, economy, if you will. And the Bureau of the Treasury originally planned to sell 175 million in tokenized treasury bonds, or TTBs as they're you know, coining them here. But the bids peaked over 31.426 billion Philippine pesos, making it oversubscribed by that 3 times that we just mentioned, from the original minimum offer 10 billion pesos. So it ended up coming down to being sold at 15 billion Philippine pesos. Those are due in November 2024 and carry a 6.5% coupon rate. And then the DLT registry will be running in parallel along with the National Registry of Securities, or NROSS. Again, this speaks really towards the confidence that people have into this ecosystem. Moving over, though, to the Canton of Zurich, they are issuing a digital bond settled with wholesale CBDC. The Canton of Zurich issued a 100 million franc, or about $113 million digital bond via SIX Digital Exchange, SDX. We keep seeing them come up time and time again in the headlines. This is an 11-year term with a coupon of 1.45%, settled again in CBDC wholesale, which was issued by the Swiss National Bank. Something important to note, though, that the two pilot banks that were allowed to use the wholesale CBDC were Zürcher Cantonal Bank and UBS. Meanwhile, Raiffeisen was geared towards using normal Swiss francs. Regardless, though, great to see use case here. We just heard at Tokenized this why wholesale CBDC is coming up from Jacobo Ochando Ortiz from Deloitte. That's something that they're focusing on in Spain. And so great to see that Zurich is, and the Swiss are already implementing this. Again, something that we keep on bringing up with SDX is their CSD, the fact that it's on chain, right? And the fact that you can untokenize some stuff based on that integration. So the two CSDs are integrated, but the bonds that we're talking about here are natively digital, right? These are only accessible natively. So the SDX CSD is the primary registry. Now, moving on to Calistone, we did see a report come out saying that asset managers expect fund tokenization within 1 to 3 years. This is very soon, right? And so we have some notable stuff coming out of this report. We have, how long is this? Like about 10 pages full of graphs, everyone talking about, what they're expecting, really being one of the biggest motivators being cost savings. This is why a lot of the asset managers want this on chain. We already talked about why JP Morgan is announcing their work with asset management and wealth management portfolios, the ease of rebalancing, the ease of reconciling and whatnot. And we've also seen a little bit more of a personal investment experience be some of those takeaways. And so this is just really, really exciting to see from the point of view of adoption, right, into these asset management spaces. So congratulations, Calistone. We definitely have to do a deeper dive into this space. But yeah, that's fantastic. And so we're going to move on to the next segment of our show, which is a special announcement from Tokenbridge being led with Herwig Konings.
Got a fantastic interview here with the team at Tokenbridge. Daron, Stephen, welcome. Welcome to the Security Token Show.
Thank you.
Before we jump in, I know you guys put a lot of work and effort into your new announcement, launching Tokenbridge with a beautiful video. So why don't we go ahead and roll the clip?
It's easy to follow the crowd, to keep investing using the same familiar systems, to waste time and money in the twists and turns of old-fashioned technology, where efficient client relationships and transactions are compromised. It's time for a change of direction, a new path that changes the industry and the experience for investors. It's time to move forward into the investment future on a bridge to better. Tokenbridge, advancing the investment world.
Still makes me well up.
Whew. That's a fantastic, fantastic little intro to you guys. Daron, maybe you want to take it away?
Yeah, sure. Hi, my name's Daron Pearce. I'm the executive chairman of Tokenbridge. I've been working with Stephen for about 15 months now, and he started this venture a bit before that. Prior to that, I was at BNY Mellon running the asset servicing business across EMEA. I'm delighted to join you this afternoon.
Fantastic. Welcome. Stephen, you want to give us a quick intro about yourself? Maybe jump right into Tokenbridge itself?
Yeah, sure. Thanks, Herwig. Thanks, Daron, as well. Good to meet you. Good to be on the show. Yeah, my background is as an independent technologist working in the City of London. So on lots and lots of project-based deliveries around wealth management platforms and so on. And Daron and I, we're talking over the past 18 months about fund tokenization. To date, actually, we've been doing a lot of explaining about what that is, but some epic news in the past couple of weeks. JP Morgan and the Monetary Authority of Singapore and the UK government have all come out and done some of the heavy lifting for us and telling everybody what fund tokenization is and that it is a thing. So we're delighted to be launching actually just 3 weeks ago before that wave of news hit. And Tokenbridge is an exciting software company that allows token owners and their advisors, that's consumers and their advisors, to aggregate all those tokens together and get really personalized advice in a really cost-effective way. So it's a bit of a win-win situation because we think that, as mutual funds in particular become tokenized, they ultimately become cheaper, and that means more people can get more advice. And we think financial advice is absolutely fantastic for all kinds of people. So it's a very exciting time, I think, and I think we're going to see this wave spread out over 2024. So it's good timing.
Yeah, fund tokenization has absolutely taken center stage. Huge news. We did just talk about it on the show right before we got to you guys about everything happening in the UK. Now, you guys are more of the plumbing behind actually making a lot of this work. So maybe tell us a little bit about, what specifically makes your technology different. There's a lot of new players coming into the space, definitely a lot of noise, if you will. I had the chance of actually even getting a demo from you guys and was absolutely blown away. But tell us, what makes you different?
Yeah, sure. So we are a software company, and we enable advisors and actually consumers, where they go direct, to aggregate their fund tokens on their phone. And they can connect in that white label app. They can connect those fund tokens with some of their personal tokens, so about their values or their goals for investing. And ultimately, and these are some big long words here, but we use them as sort of superpowers, like open architecture. We'll aggregate any token. Personalization will make it all about the consumer and their advisor. And distribution, which means that we're going to make it really easy for fund managers to reach out to consumers and their advisors. So think of it as an aggregator on your phone, and it gives consumers real power over what they can choose to invest in and how they want to invest. That's a big step forward, because to this point, it's been quite expensive and frictional for people to do that.
And I like to think we work across the whole of the investment life cycle, which again really differentiates us. So we've got the expertise to help fund managers produce tokens and get their funds into the token market. We've got the technology to support the wealth managers and IRAs and connect those guys with those issuers of tokens. And then our software connects the IRA or the wealth manager with their underlying client on a completely chain agnostic basis. The fund managers, they can choose any chain they want to, and we'll aggregate those on our platform. And we're connecting those RAs and wealth managers who, are increasingly relevant in a highly digitized world, particularly from people like my son and so the next generation of investors who are very focused on a digital experience. These kids are digital natives. They expect everything to be accessible via their phone. And the old world of applying for units in a mutual fund and finding out tomorrow how many you got, and it's not as many as you thought because you didn't have the cash. That whole antiquated world of investment, that's going to unravel very quickly as the market looks to support the next generation.
It's 2023, and most people almost assume that this is already a given when it is in fact not. So you're absolutely doing the necessary work to make that happen. I find some very interesting here. You're not necessarily focused on targeting the end consumer. You're actually looking to work with the fund products themselves, the fund managers, and then get them into the hands of the wealth managers and the RIAs. And through your technology, they are able to reach their customers, the end consumer, using, of course, Tokenbridge. Do I get that right?
Yep.
Yeah, you did. And I think, look, we've had some, the history of, let's call them crypto assets as they used to be known. So security tokens, ICOs, all of that stuff is now in the rear view mirror. And I think what regulated token issuers, and we only deal with regulated tokens and regulated advisors in Tokenbridge only deals with that customer base. What they now have is a chance to get up close and personal. Fund managers can get up close and personal to their consumers. And that brings with it a whole host of opportunities for fund managers to tailor and personalize their products, and for consumers to really get what they want. Something that really works for me or for you, Herwig, or for Daron, is distinct from each other, and that can be customized into our aggregator. So that's quite a big step forward, because up until this point, consumers were getting great advice and great products, but they were kind of generic, and that was a question of costs and tech stacks. But now when this is brought down to the level of individual tokens and individual, consumers, it can be hyper personalized, not to make that word do too much work, because it's very common in the fund management industry. So that's very exciting. So I think that it's like the beginning of a real promise of the distributed ledger to give, unique and individual outcomes.
If you go back, Herwig, 7-8 years, the big trend in the wealth market was robo-advice, that, there would be this automated way of giving people good advice at a reasonable price point. And it massively under-delivered because the technology wasn't there, the required level of personalization, understanding of people's life situation, their risk tolerances, all of that. None of that could really be codified in a meaningful way at scale. This changes the game completely. I think of what we're doing as delivering on the original promise of robo-advice, but at a far more personal level with a much higher level of automation and a much more aggressive price point.
I've got goosebumps. I'm extremely excited. Congratulations on launching. To end our segment here, why don't you let our audience know what's the next milestone? What's that big next announcement you guys are looking towards?
Well, we've got our first customer under wraps, ready to be announced, and it's all about personalization. We're launching in the US and the UK simultaneously in early 2024, and actually physically getting some white label products out there. So watch this space. We've got quite a good, I think, schedule of announcements to come. So we're really, really excited, and we're, the stars are aligning, and I think the industry is about to see 2024 as the year of tokenization.
Absolutely brilliant. Hopefully we can have both of you back on the show as you plan those announcements to talk about it. And with that, thank you so much for being here.
Hey, thank you.
And this week we can close out our show with our companies of the week. And I say our because normally Kyle is on the show, but this week it'll be just me giving my entry for companies of the week. For those of you who don't know, that's when we pick a company every week that we talk about to pretty much highlight, what they did for the space, why we think they're moving the space forward. And it even puts them in running for company of the year, which we will of course pick in January for 2020. This week, I gotta give it to Calastone. Calastone has absolutely been integral to all of the news that we saw come out. And in fact, they've been helping advance the space forward for quite some time. For those of you who don't know, Calastone connects and automates basically the trading, the reporting, settlement, payment processes. They are plumbing when it comes to specifically funds, investing, and settlement, and everything else associated with that. So they're a huge, huge player. A global player. In fact, they've been working with Schroders as part of Project Guardian over in Singapore. And now we saw that they have been integral to helping with the investment associations report in the UK, helping provide the infrastructure and the advice and participation for essentially fund tokenization in the UK, as we discussed earlier, as well as the fact that they did that report themselves. They went ahead and surveyed all of their clients to really get a pulse on where do people see fund tokenization, and the results were overwhelmingly positive. Highly recommend you go check out that report that Calastone put out individually as well. But for all of those reasons, I got to give it to Calastone. You're my company of the week. And of course, that's our show. I hope to catch all of you again next Monday with more interviews, more latest and greatest of what's happening in the space, more market movements. And of course, if you have any feedback or suggestions, please let us know. We're all over social media, or leave a comment, share, and of course, subscribe. And last but not least, make sure you check out stm.co. That's where you get all your latest trading information when it comes to this market, all the latest news and research that we put out. And with that, happy tokenizing.